What's going on, you guys, and welcome back to the channel. If it is your first time here, my name is Brandon. As always, we do have our Investing Academy as that first link down below. Who you guys got for the game tomorrow? You should be watching this video on a Saturday. I mean, it's Saturday morning right now that I'm filming this. I'm going to rip home. I'm going to edit up. I'm going to post it out to you guys. That way we can all enjoy the Super Bowl tomorrow. I can't believe I'm saying this, but there is a part of me, there's a little part of me that wants to see Tom Brady do it tomorrow. Like, wouldn't that be something? I don't know. Obviously, you gotta love the Chiefs, but like, it's crazy stuff. In this video, we're gonna be talking about arguably the #1 dividend stock in Canada. I actually saw a list which we're gonna cover today, and they have this stock rated as #1. I think it's a stock that gets underloved, underappreciated, and actually over the coming week, this is a timely video because they are reporting earnings, and personally speaking, or for personal opinion, I'm expecting a nice big dividend increase. So we'll talk about why that's the case going forward. But if you enjoyed, give this video a thumbs up. Here's some more Canadian content for you guys. The company is Manulife Financial Corp, ticker MFC. This is obviously a company that operates out of the insurance industry with a market cap of $43 billion and today starting yield of 4.65%. So a really nice, attractive starting yield. And to dive straight into that list that I was telling you about, this is a list from Money Sense where they rank a bunch of their Canadian dividend stocks. And right at the top of the list, #1 company, this is 1 out of 5 stocks that they grade, or 1 out of 6 stocks, I should say, that they grade as an A grade rating. It's the company Manulife Financial. And this grading is based on the dividend security, the dividend yield, current yield, the expectations for increases going into the future. And as we dive into this video, I think we may have the data to justify that. So definitely a stock to keep on the radar, potentially even to add if you are someone that's seeking passive income and you really want a reliable Canadian company. Company overview very briefly. I mean, we don't need to get into this because you're probably familiar. They are not only an insurance company, but they are involved in wealth management. I obviously know this quite well because prior to starting YouTube here, I was actually licensed with Manulife on the wealth management side of things. One of the big areas of opportunity for the company is Asia, but they dominate really the US, Canadian market here. They're one of the big three, et cetera, et cetera. This company has a quick background. Like, they had a colossal fail during the credit crisis. They were over leveraged along with many other companies. And since then, it's honestly been like they've been just treading water. This has a lot of investors kind of neglecting it, not showing it the love. But again, with the 4% dividend, nearly 5%, I should say, 4.6, it's one that I think should be on the radar. And, you know, this is not an immediate expectation, but eventually when rates do rise, which will happen sooner than later, companies like Manulife and companies in this space will tend to benefit a lot from those periods. So we are kind of in an ugly period for the company. That said, they've kind of found a little bit of a trend here, just kind of treading water. Let's see where they go from here, because in terms of valuation metrics, this company trades at a price to book below 1. That would suggest that if you take a value approach on stocks, it's looking possibly like some great value. I know Buffett or Benjamin Graham would be happy to see that. Today, they're trading at 9 times earnings, so a very cheaply priced stock. We'll talk about maybe there's a reason for this why in a second. But in terms of their health, along with that, not only the valuation, I mean, they've got 5 times interest coverage. It's not a company that's in a big financial burden. Debt to equity ratio is low and debt to asset ratio is low, which is not on this, or it's below 1, but it's not on this chart. So financial health, actually strong. That said, the company is priced for not a whole lot of growth. There's probably not the most exciting outlook going forward, especially when you got a bunch of other companies and other assets that can make you a ton of money. Again, this one's kind of taking the back seat. That said, if you are interested in dividends, which is why you probably watched this video, this company last year increased their dividend by 12%, which is one heck of an increase. A lot of companies we see raising 3%, 4%. A 12% increase is massive. As mentioned at the top of this video, they are set to report their earnings next week, so it's going to be one to watch. Their date is set for February 11th. And although they haven't announced an increase this year yet, obviously, based on a couple measures we'll look at in a second, I am quite confident that we're going to see a nice increase. In fact, a couple of articles I came across, analysts are projecting that this increase is going to be bumped up by about 8%, actually possibly higher. Because in terms of the actual dividend metrics and how well this company's paid out dividends, they've been growing the dividend rate at just shy of 5%, or just shy of 10% over the past 5 years. Double-digit growth over the past 5 years. Again, we saw the 12% increase last year. This is a company that's paying out less than half of their earnings. So 40% payout ratio, that suggests that there is a lot of wiggle room. And it suggests that as long as the company continues to do well, they have a lot of room to increase this dividend. Again, I highly expect this will be the case going forward, but we'll have to watch for that next week. Manulife, in my opinion, is a company that we know gets a lot of variance in opinions. A lot of investors would argue, why would I buy this stock when it's not going anywhere? It's treading water. The outlook isn't necessarily massive for this company. That said, if you are approaching it from a dividend perspective, based on the metrics we looked at, if the company can continue to grow well in their core areas, and their core areas in particular, again, as I touched on at the top, Asia, Manulife actually has a very strong presence in, considering most North American companies. Canada here, as you're watching this video, where we're watching this video, another strong market. And as long as they can grow their core earnings in those areas, US as well, the more efficient they can become, the more emphasis they're going to put on raising these dividends. And to have a 4.65% starting yield, if you went out and bought this stock today, especially amongst a landscape of stocks out there, 4.65% is a very attractive yield, especially understanding that it is adequately covered. Now, on top of that, if the company's willing to bump these dividends up year after year with these very attractive and very generous increases, your yield on cost that you can just compound and grow, that will go through the roof with a great dividend growth play like this. This is what we consider a dividend growth company when we see the types of numbers that they're increasing their dividend rate at. To me, this is a company that does deserve more credit that it gets, especially given the valuation metrics. In reference or regards to that list right there, I would find it hard to disagree that Manulife Financial is one of the better dividend paying stocks in Canada, and it is worth a look. I did get a comment. Someone was saying on another video, value investing is dead, or they were asking if I would say my thoughts on value investing being dead, which I may actually post an entire video on because I think that's actually such a good topic right now. I don't believe value investing is dead. I believe obviously growth has been where it's been at over the past little while. Growth investing has reigned supreme, but that's not going to be the case forever. And you can go back, if you go back and look over history, there are periods where value investing falls out of favor. Growth investing is where it is. They always do end up reverting. And in my opinion, we may be at, I've been talking about this, but we may be at one of those little shifting points. We may be at one of those little trending points where value investing starts to come back into favor. It's very possible. This growth snowball is just going to keep going until it doesn't. And then at that point, people are going to start seeing value in the value stocks. And it's hard to see that now, but I truly do believe that's the case. Go read any type of history book. This happens on many occasions. But today, Manulife is a good example of that. The shares trade at $24 Canadian. This is the Canadian shares on the TSX. Again, we're looking at the 4.65% yield. You could call this a stock to buy now. More or less, I would just consider this is a great stock to own in the portfolio if you are a dividend investor and you like having that passive income. Obviously, guys, do your own due diligence, do your own research. This is just my opinion here. But as always, if you enjoyed, give this video a thumbs up. If you're not already subscribed, subscribe to the channel, man. We post videos every single week, and hit the bell for notifications. As always, we do have our Investing Academy if you want courses and training for Canadians, which is that first link down below. But I'm going to go home, edit up this video, call it a day, and enjoy the game tomorrow. Thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.